Excellent. Okay, hello and welcome to everyone joining us. We're going to get going shortly, so make sure you introduce yourself with your name and your country in the Zoom chat. It helps us know who we've got on the call, but also, and more importantly, you guys know who else is here. So Peter, just while we let a few people filter in, how's the neck holding up?
Neck's holding up really well, thank you. I want, people are going to be looking at me going like, what's up with you? And whether they've seen me before or not, but I ended up getting COVID in March till June and ended up residual symptom and damage from COVID, which people need to know is significant in a lot of people. I ended up having neck surgery. So it's basically for you, I put on the brace, so it's holding my head up high.
That's great to hear. Well, it's fantastic to have you here with us today. We certainly appreciate it. Okay, well, I'm going to get going. Thanks to everyone joining. Like I said, jump in the chat. We'll be launching a poll. Make sure that you answer it. And I'm going to start with a few rules and regs. Before I do, I just want to thank the world leading trading and investment provider, IG, for sponsoring tonight's event. If you want to find an opportunity on the US election volatility, IG does offer over 17,000 markets to trade, an unrivaled out-of-hours service. So you can learn much more about them at IG.com. I'm Max Rothery. I'm the VP of Community here at Finimize, and I'm just going to run you through a bit of the agenda and some of the rules that we have to make sure everything goes smoothly today. So as I've already mentioned, just introduce yourselves in the chat. As me and Peter discuss throughout today's event, you can write questions as we're talking in the Q&A. That should be at the bottom of your screen if you're on a mobile, or at the top if you're on a laptop. Ask those questions throughout, because halfway through tonight's virtual event, we're going to come over to you guys in the audience and have you ask your questions live to Peter. If you don't have a question, you can upvote other people's questions, but don't worry, I will remind you when that is the case. But that's enough from me. Now, I cannot say how excited I am for all of you Finimize members to hear from our VIP guest tonight. I must stress that nothing in this discussion is financial advice, and Peter won't be recommending any stocks to you folk. But since we're talking to a true legend of the trading floor on Wall Street, it might be a little bit US focused.
I'm losing you, Max. Yeah.
Can you still hear me?
Go ahead, say it again. Sorry, Max. Didn't mean to interrupt.
No worries. But we will try and keep it as universal as possible. If there's any questions you do have, make sure that you're funneling those into the Q&A. Now, 2020 has been a volatile year in many respects. The stock market expects no different when it comes to the impending US elections between Trump and Biden. So the question is, could a change in power lead to a drastic swing in the market, or will a decisive victory in fact give everyone a clear path to recovery? Well, Peter is a legendary stock trader on the floor of the New York Stock Exchange, often referred to as the most photographed trader on Wall Street, and we'll come on to that shortly. But with more than 30 years of experience on the trading floor, there's no one better placed to tell us what's in store for the markets with these upcoming US elections. So we're here to take your chance and have your questions answered live following the chat that me and Peter are going to have. Well, I'm going to stop sharing my screen. I'm going to stop the poll, and we're going to kick things off now. So we're here to talk about the election. Peter, before we dive into the details, can you tell us a little bit about your job, who you are, and how it came to be what you're doing today?
Sure, absolutely. So I have been on the floor of the New York Stock Exchange since 1985. My background was sort of mixed. I mean, I went to college, I studied agriculture actually, and then international business and economics. I did attempt to get an MBA, which I never did finish back in 1980. And the 80s for me were sort of a little bit complicated. I owned a record store in New York and was in the music business for a while. Then I ended up going to West Africa and working as an accountant for a Norwegian oil company. Then I came back to the States. So my journey into finance, even has been quite a wild one. A lot of people who are on the floor of the stock exchange, historically, usually it was a family members would be there, right? There is no training to be a trader on the floor of the exchange. People go out there, they get degrees in finance, economics, and whatnot. They go on to get MBAs. For the most part, they go up to work on trading desks at large brokerage firms or whatnot, if that's their goal. The floor of the stock exchange itself is what's called an auction market. I'm sure a lot of your audience has seen the movies and has seen the tapes of what the floor looks like. At least historically, it's a little less than that now, with screaming and yelling, what we used to call open outcry, with a lot of paper on the floor. And so in 1985, I came back to the States after being in Africa, and I ended up getting a summer job as a teletypist, sort of on the lowest rung of the job circuit on the floor of the exchange. The floor of the exchange has been around since 1903. It is literally the most powerful and significant financial institution in the world, besides the fact that it's in New York and it represents the New York Stock Exchange and 5,000 plus more equities that we trade on a daily basis. It's a matter of people's perception of it. It's the confidence. It's literally one of the only markets, perhaps now the only marketplace where the human element is still there, right? And for me, that was the most attractive part of the job. I came down there, I started at the bottom, I was the teletypist, but once you walk onto the floor of the stock exchange, and I hope once the world reopens again and we and everyone at IG get more acquainted, I will host you back on the floor, as I've done for many years, to let you share the excitement that I have by being on the floor of the stock exchange, right? It is the most exciting job on earth. But when I got down there and I started at the bottom, it was that incredible human element, the adrenaline, the excitement, the relationship of one person to another, talking, communication, and then trading, obviously. So it's a wonderful mixture of super high adrenaline, finance, the human element. It's a wild and crazy place. But in fact, what goes on the floor of the stock exchange basically controls and predicts the pricing of equities, of the 5,000 equities that are now being traded all over the world 24/7. But what goes on the floor of the exchange is significant still to this day, and it will affect all the other markets as they open up. So that was my initiation on the floor. And even though I have no background, my parents came to the States in 1947. They're from Europe. They survived the Holocaust. And so finance was not part of my upbringing, but it became my life and my career. And it became something I love to do. So I always say this to people who, when I try and educate people and sort of inspire them, is to say that you need to find, when you find something you love to do, you'll never work a day in your life. And so for me, the floor of the stock exchange, finance, markets, the branding and the advertising and the marketing that goes into the experience of listing a stock, trading a stock, and corporations and consumers, all of that goes into what my day is like, is what gets my juices flowing. It's what makes me happy to wake up in the morning and go to work.
Awesome. That's so good to hear your passion about this, Peter. And we'll come on to later, really trying to get a feel for what that excitement is like on the trading floor on election night. But first up, I would love for you just to set the scene of the markets. Just give us some context this upcoming election, what's been happening in the markets in the run up to the election evening itself.
So it's really important to know, to put this year in context, right? Historically, we've seen financial crises, we've seen wars, we've seen a pandemic, and obviously in 1918, we've seen different experiences that, events that will affect the markets throughout the world on a day-to-day basis. But never before have we ever seen a crisis that literally has affected every human being on the face of the earth. And I think that impact, even though people, far, far away from the New York Stock Exchange are being affected by this, and they may not have any exposure to it. I think the incredible extensiveness of this crisis is something that we need to put in perspective. Let's go back quickly to February 12th, or February, the 2 weeks in the middle of February. The market was at record highs. Now, let's be clear that since Mr. Trump came into office, we've had wild and crazy volatile markets, okay? Whether it was Brexit, whether it was North Korea and our interactions there, whether it was China trade deals, whatever it was, Mr. Trump, in my opinion, is a crisis creator, and whether they're real or imagined, and then a crisis solver, whether real or imagined. And that has been what the market has been thriving off of over the last 4 years. But let's focus on the last year. So we saw record highs in the market in February, pre-pandemic, right? That was a function of reasonable interest rates, low unemployment, a very robust economy, a healthy balance sheet of the banks, which was different than the financial crisis of 2007, where the banks were not very healthy. Their balance sheets were not, right? And we saw the consumer in really good condition here in the States. And then suddenly, over the next 6 weeks, we saw the reality of the virus. We saw the virus travel from China to Europe. And as it became a reality, and it's no wonder to anybody out there that we were all in some level of denial about the reality of it and its significance, as was the market. But once March 13th came along, March 15th, when it became established that it was a pandemic, at least by our administration, even though what we're finding out now, we knew a lot more about it before, but we're not going to get political here. The market proceeded to sell off into March 23rd, which was, let's hope, the bottom that we've seen in 2020. That was a 10,000 point plus move in the Dow Jones Industrial Average. That was a double-digit sell-off in both the NASDAQ and the S&P. And it was an unheard of, fast and furious sell-off. Now, what caused that? Fear, global slowdown, fear of a recession and or a depression. We're finding out now, not to get political, that apparently a lot of the insiders and the hedge funds were notified pre-March 23rd that we were in some trouble, globally, economically, and for sure the markets. And so whoever was selling, they were selling hard, right? People were liquidating their accounts. So from a super strong, robust economy on February 12th to a low of March 23rd, we suddenly saw the reality of it. And the market, on a day-to-day basis and a minute-to-minute basis, reacts to what's going on globally. Sometimes slowly, sometimes it takes a little longer. But we saw it react in a way we've never seen it react before. So then what did happen? We saw, obviously, the reality that we were in trouble, health crisis-wise. We saw that we were created, that literally as the world started to shut down, that people, the reality of the incredible global economic shutdown, shelter in place, you know, the cruise ship stopped going, the movie theaters closed down, the restaurants were open. I mean, basically we came to a grinding halt, right? And it's our society, it's our life that came to a grinding halt. And in turn, the market, which is everything that we represent, right? Which is the sneakers you wear, the iPhone you buy, the movies you go see, the sports you follow, the airlines you fly on, all those things came to a halt. And the market sold off hard into March 23rd. In response to that, Mr. Trump, as any president would have done, went to the Federal Reserve to try and protect the economy the best way they could. But a little more, Mr. Trump is running on a strong market as opposed to a strong economy, which could be one of the problems. But once again, we'll try and stay nonpartisan at the moment. But what ended up happening is they went running to the Fed for help, right? And what does the Fed do? The Fed pumps, as we saw in 07, 08, a little bit different this time. They pump liquidity into the market. They set up stimulus packages. For the average Joe, for the basic the general population who was given a check, right? And then for small businesses who were given money, and even some of the large businesses were given stimulus packages to try and stay open, to try and protect their employees, right? And what we saw different than 2007-08, which was $1.8 trillion over a year and a half time that the Federal Reserve put into the market, we saw $3 trillion put into the market, $3 trillion put into the market over a 2.5 months period of time. And that power of the liquidity and the stimulus is what basically, and I guess an oversold market into what we had seen from where we came from, which was a solid, strong economy. The market proceeded to go up. What we've seen since March 23rd is a double-digit rise, right? The market has rebounded in so many ways. A lot of the indexes have rebounded, but I would think it's more stock-centric than the market, because if you look at the S&P, we're only up about 1% on the year. But the market per se rebounded in an incredible way, right? Clearly, in my belief, is a function of the stimulus package and the liquidity pumped into the market by the Fed, trying to save that strong market that Mr. Trump was running on. However, what was interesting that we saw was that did not go. You know, it's a fascinating market. We saw it rally so hard, and the bottom line is to watch this market go up so fast and so furiously in the event of the world coming to a complete halt was one of the oddest bifurcations that we've seen. That's my new fun word of the day. I know you guys, we keep the jargon to a minimum with Finimize, but bifurcation is where sometimes the market and the economy go in concert. They trade together. Strong market, strong economy. We've often seen in crises where they bifurcate, where they go in opposite directions, right? And this is one of the most amazing examples of it. The market rallied super hard in response to the stimulus and liquidity, while the economy was in shock, right? The bottom line was we were still in the midst of a severe global virus. People were dying in a radical amount speed. Economies were coming to a halt. And what we did see was the economy start to fracture in so many ways, right? So many unknowns. When are people going to go back to the movie theaters, go back, get on cruise ships, get back on planes? Yet the market kept going higher. So I think this is one of the super important things that people in your world and my world need to understand is that you can't, I said it to you earlier, hope is not a strategy. In order to trade this market, especially in this incredibly wild, volatile time that we're seeing here on October 29th, 2020, is everyone needs to do their homework. Everyone needs to get access to information, right? People need to understand why markets do what they do, right? And once again, they can't hope themselves into a positive trade. So moving on, sorry to turn a long story short, a short story long. We are now a week away from the election. Historically, the market doesn't really get affected that much by changing presidents. If you look at the historic data on elections, we've seen that if markets rally into the election, normally that's a show that the incumbent is going to win, right? If the market is in recession mode when an election happens, we normally see that the incumbent loses. So there's a lot of, markets do trade on historic data. I'm going out with my posture is, it's called New Rules 2020. I don't think we can judge what's happened over the last 8 months or what's going to happen over the next 7 days or perhaps longer can be judged off of historic data. We have an administration that is in complete denial about the reality of where the economy and the virus is at the moment, right? We're seeing, you and I are talking today, we are now seeing 2-3 back-to-back days of a rather strong sell-off in the market, right? Now, in conversations that I've had over the last 6 or 7 months, my question has always been, is the market going to catch up with the economy? Meaning that we're going to retrace and revisit the lows of March, because at the end of the day, we have a second or third wave of the virus. We have an economy that is having trouble reopening. And then even if we reopen, and even if we have a vaccine, businesses are still going to have to maintain a quarter of their growth, right? Restaurants will only be a quarter open. Planes will only be a quarter full. Is that a business model that's sustainable, right? And what is the economy going to look like going forward? So go ahead. You want to say something?
I was lost in your story there. You drew me right in. That was a fantastic way to set the scene, Peter. Thank you. But what I would just like to nudge us towards for everyone on the call is looking at, okay, what are you predicting in terms, or how do you see the world in a Trump world, and how do you see the world in a Biden world?
Okay, great question. And to be perfectly honest, the best answer I can give is I don't know. Right? We have been tossed and turned by the crisis we're in the middle of. It is literally a story that is evolving minute to minute, right? Coming into this call, you and me, we just saw that France and Germany are going into lockdown. The United States is spiking up to levels unprecedented that we didn't even see March in March, April, and May. So we're seeing reopenings that are just coming up against a brick wall. And the obstacles that we're seeing ahead of us are quite large. So even all that being said, is the problem I have answering the question is Mr. Trump has not put forth any policies. If I were to ask anybody, even a Trump supporter, although they may make up a good story, he has not really put together a plan. I would say, to stay nonpartisan, one of the problems we've had as a country in dealing with this crisis is we haven't had leadership. We haven't had a plan, right? As we saw in a lot of countries in Europe, countries that hunkered down, got together and made a distinct domestic plan, a countrywide plan, have been able to curb the growth of this virus. We have not. So as you watch sorry?
I was just going to say, are there any sectors that are particularly on traders' mind at the moment that are more obvious than others that would be affected depending on the outcome?
Well, absolutely. So look, Mr. Trump has no plan. Mr. Biden, historically, people believe, Republicans more than Democrats, that some Democrats perhaps, that Democrats and liberals are anti-Wall Street, are pro raising taxes, are pro regulation, and all of these things, which can sometimes have negative impact on the markets. I'm a firm believer in this situation here, that we are in such a crisis, that Mr. Biden, if he wins the presidency, is going to pass stimulus on multiple fronts. He is going to do nothing to interrupt any recovery that we're going through. We're in trouble here in the US. The market, yes, the market has been strong, but as an economy and as a population, we are in trouble. Multiple millions of people are out of work. Businesses are closing. 6 million people didn't pay their September rent. So how do you deal with this, right? Is the market going to catch up with the economy? Is the economy going to catch up with the market? Mr. Biden, my belief is going to pass stimulus, if he wins, will pass initial stimulus that now is being locked up in Congress and the Senate for the average person who needs the $500, $600, the $1,200 to get through the next month. And I believe he's going to pass infrastructure stimulus that is going to create jobs in the United States and help us rebuild our country. We saw it after World War II, basically rebuilding roads, addressing the sustainability and solar and other climate change oriented companies, and rebuilding bridges and whatnot. So my gut is, I don't know what will happen if Mr. Trump wins, okay? I have more of an idea of, I think, where the market's going to go if Mr. Biden wins. It's counter to a lot of what people believe. I believe a lot of this strength we're seeing in these last few weeks are pricing in a Biden win, because we kind of get that sense from his campaign promises that he does have a plan, he does have an economic plan, and it involves stimulus, supporting the economy, and supporting the people. So in that way, but today it's down 900 points. Why is that? You know, the market is very funny. It gets hyper-focused, right? The market is when we were talking about trade deals under a Trump administration, one day we had a deal, one day we didn't. And you saw with his tweeting that the market would go up and down hundreds of points in a second, right? So there's a difference between tweeting some sort of a policy and actually having a plan, right? So the next week is going to be fascinating. You know, you and I are talking with 6 days left. The virus is on fire here in the United States, right? We do have unemployment numbers that are huge. We do have a market, while it's trading only a few percentage points off the high, it is showing signs of a fracturing. I'm sorry, you did ask me a question, which I didn't get to, which is, what sectors am I looking at as a trader, and what sectors that I would love your followers to be watching? There have been stocks, and I hate to use the word pandemic friendly, but that have really blossomed since March 23rd, right? Like, you've seen a huge rally in auto stocks because people are buying cars because they won't be able to fly on planes. You're seeing home sales rise. And there are two different reasons for that. People are bringing their parents and grandparents into their homes, and you're seeing new job growth, new housing starts are also blossoming. So you're seeing companies like Wayfair, which are on houseware company, because people are basically, if they're not going to travel and take vacation, and they're going to be spending a lot more time with their families at home, that they're trying to better their environment. And then you're seeing stocks like Zoom and Slack and this video conferencing, which has taken off, right? So there are lots of companies that have thrived. You know, it can be an Amazon, it can be some of the tech stocks through NASDAQ, that some have thrived in the pandemic because their services have been necessary in a pandemic. And then some of the companies have really done an amazing job of thinking on their feet, right? And they're rebuilding their business model, and they've been able to address the pandemic and try and thrive in it.
Absolutely. Yeah, we're certainly no stranger to the lockdown stock here at Finimize. One thing that we haven't touched on yet, and I want to get your view on, is the dollar. A lot of conversations around elections are always on what's going to happen to the dollar. So I would love to know whether you see it strengthening or weakening depending on the two outcomes. But before you do, if you could just tell the Finimize audience why investors even pay attention to the dollar, and why we should at a time like this as well.
You know what? The dollar is not my particular stronghold, okay? So I can't really give you that much a story on it. What I have to say is that the dollar, look, it's unfortunate that our position as a country, we are the largest economy in the world, okay? Before Mr. Trump came into office, we had, some people don't believe this, but we actually were thought of quite well amongst our allies and our friends. We did have really good, strong trading partners, right? And so export and import are obviously huge impact on the dollar. You know, I think for me, rather than look at the dollar, often people use the dollar as a hedge against the market per se. And when we are a strong economy, dollar feels well. And when we're seeing a breakdown in people's perception of us as a honest, forthgoing trading partner, that's obviously going to have some effect on the dollar. I think it's really fascinating for us to look at some of the other, which is more my wheelhouse, is some of the other hedges that people use against in the marketplace, whether it be the VIX and or be gold.
So just on the VIX there that you mentioned, if an experienced trader like yourself is still none the wiser as to what the outcome may be and what that knock-on effect might be, are some investors just betting on the fact that there'll be volatility? You know, is that a play that you're seeing on the floor?
You know what? Well, look, we need to be clear. I can't recommend stocks to you, and I'm not your financial advisor, right? And that's a wonderful thing about Finimize for everybody who's watching, is that it's a matter of information. The information highway, right? The availability of all the information one needs to do their homework, to learn about the market, and to make a decision is out there, right? And you guys are an incredible. I really give you an A+ on the fact that you've built a community of young people. You know, I often get asked, just to divert for a second, when I show young people around the floor of the stock exchange, and that could be people as young as 13 to 15 and high school students or whatnot, is that young people, they'll ask me, well, you know, hey Peter, what would you invest in now? And what stocks do you like? And I will say to them, you guys are the consumers, right? You are the core consumer in our society. And you know better than I do what's hot. I would tell a 15-year-old to walk down the street or go to school and look at what sneakers everyone's wearing, what phone they use, what computer they use, what clothes they wear, what sporting events they're going to, and what they did on their last vacation, right? And then you will get a sense of where and what social media you're on. And you will then get a sense in a normal market what stocks are going to be hot, right? We've seen that in apparel. We've seen that in online gaming. We've seen that in a lot of things. So per se that they are, young people are one of the greatest predictor of what the market was due. I forgot your original question. Go ahead, Max, say it again. Sorry.
No, my original question was just on if you're not looking at a particular outcome per se.
Oh, the VIX.
Investing in volatility itself.
Gotcha. Sorry about that. There's so much to say. So people need to understand what the VIX are, right? So it's a financial instrument that was developed to trade risk, okay? So it's fascinating, and volatility, right? So you would think that would be, so it's a fear index, right? So, oh, I know where I started out. I started out by saying it's important for us to draw a line between investors and traders, right? You mentioned to me before that we are seeing a major splurge that we've seen in the pandemic of young people getting involved in the market. Whatever platform they've been using, young people from the age of 25 to 40 are taking their money back, whether they have a small 401k, whether they have a small savings, and they're trying to trade the market. And I said, be careful. It's important to learn how to trade a market. It's not for the faint of heart. All that being said, so we have investors, and then we have long-term investors and traders who could be day traders, could be overnight traders, whatever it is. Two different kinds of people. The VIX is a fear index, which means that you are able to trade it on its own. It is basically, if people want to look at it, VXX, it's fascinating to watch because fear is something we all experience in our lives in any number of ways. Surely fear of money and economic security are one of the biggest fears we all have, right? So to watch an index in a market that is based on that psychology is amazing. So the VIX, when it goes down, I would imagine the VIX are up today. I haven't looked at it, but when you and I started the call, the market Dow was down 3%, almost 900 points. Clearly a function of, I believe, where the virus is at the moment. As I said, the market gets hyper-focused. That's what we're looking at today. I mean, I think it's the virus, the vaccine, and the volatility, right? We got 3 V's here that people are looking at. So if people have, for the more experienced trader, for people who have a portfolio and they are long the market, meaning that they own stocks, hopefully in the long term, that those stocks will go up in a market on a short-term hedge. Well, what does that mean? That means that I'm afraid that I don't know who's going to win, Trump or Biden. I surely know that the market's going to go as we've seen it for 8 months, barely a day, has the market moved less than 1%, which is a big move, multiple times a day. We're seeing a 3% move today, right? I traded the market up until I got ill, but I watched the market every day. And it's been amazing, the intraday volatility, whether it's tweet related, headline related, trade related, whatever it is. We're seeing moves that are 1,000-point moves intraday. That's unheard of, right? So if a person has a portfolio and they're long the market, hoping long-term that it goes up, and they're fearful that, I don't know, Biden is going to win, he's a Democrat, he's going to raise taxes, he's going to put regulations on the banks, the market's going to sell off like Mr. Trump is predicting. If he loses, that the market's going to crash. Well, I would like to protect myself. So we're not going to use fancy jargon, which means if I'm long the market and there's a possibility that the market could sell off into this election, I may want to take a position that if it goes down, I'm going to make a little money. I don't want to sell out all my stocks that I've spent a lot of time and work curating, but I do want to protect my investment in case we see some groundbreaking stuff happen, right? I was going to use, when it's the fan, you turn off the fan and clean up the mess. So that's what the VIX are for. People trade them nakedly, meaning that they just they watch the market and they're using this financial instrument to trade an up market or a down market. But people use it as a hedge, as some people will use gold, right? If they are long and own the market in case of a short-term sell-off, that it will be a surprise. Markets don't like surprise, and I know people's portfolios don't like a surprise either. So that's what that's about.
Awesome. Well, thank you for that. Now, I'm very aware that everyone on the call is keen to get into the question. So if you are listening, now's the time to dive into the Q&A, because I've got one more question for you, Peter. And it's not on the stock market per se, and it's very much a personal question that I'm just interested when I knew that we were going to get the chance to talk to each other. Can you just give us some insight and paint the picture of what it's like around election night on the trading floor?
So I started to mention before that historically, and I've been there for 35 years, and while the crash of 87, 9/11, the financial crisis of 07, the whole Trump presidency, I remember each one of those days, right? I remember when stocks moved 1,000 points on Brexit. I remember when the market moved 1,000 points on a potential nuclear proliferation with North Korea. I remember the night that Donald Trump was elected, and at 3:24 in the morning, 4 years ago, the market went down 1,000 points, and by the time we opened, the market was up 1,000 points. Historically, coming into the Trump experience, election day has not been that exciting a day, okay? We've seen changeovers from Republican to Democratic. We've seen all kinds of things happen, but the characteristics of the Trump presidency, the Trump lack of policy and leadership, the crisis we find ourselves in, the fact that Mr. Trump has really been running on a strong market and really doesn't, in my opinion, care that much about the economy and the virus, his own words, right? That we're going to see. So every election coming into this one has not been a memorable evening or day on the floor of the stock exchange. I will say that much. As I said to you, I remember all those other days in detail, and I have a good memory. So politics and markets don't often cross paths. They may on a certain, policy change, intra presidency or whatnot, but never before have we seen what we're seeing today. Okay, so what do I anticipate over the next few days and on election night? Once again, I don't know. I surely know there's going to be volatility. Okay, I think it's important to note what we're seeing over the last couple of days. The market is starting to, as I mentioned, my curiosity is, will the market catch up with the economy, meaning that we will retest some lower markets, because the bottom line is the economy, and the economy is in trouble and the virus is roaring? Or will the economy, or will the market catch up with the economy, meaning that the market will catch the backwind of the strength of the market and take a bit of a lift? I think, once again, I don't know is an okay answer to the question. The fact that, I know we're going to see crazy volatility, okay? I know that the fact is that Mr. Trump's claim that if he loses the election, then it will be a rigged election, is definitely going to throw a bit of a wrench in anybody's predictability of what's going to happen, right? Markets like predictability. They don't like uncertainty. And I would tell you that never in my life, as a trader, as a human being, or as an American, a voting American, have I ever seen so much uncertainty, right? We are 5 days away. We don't know what's going to happen. If historic data tells us anything, 4 years ago, Hillary Clinton looked like the winner at this point, right? So maybe the polls are not right. What we do know is that the next few days are going to be volatile. We're going to see movements of 1,000 points. And I'm not saying this, coulda, woulda, shoulda. I said this 2 weeks ago. It's a guarantee that there's so much uncertainty about the virus, about the vaccine, about the stimulus, about the outcome of the election and how it's going to happen, right? Well, eventually we're going to know, unless Mr. Trump, handcuffs himself to the desk in the Oval Office and refuses to leave, eventually, whether it's on election day or within weeks afterwards, we will have a new president, right? I mean, it may be the old president, it may be the new president, but so much uncertainty, right? And I think that's fascinating. This will, we're talking about people getting involved in the market. This is I beg people to do their homework. I beg people to perhaps stay on the sidelines unless they're veteran traders, right? You can, in my experience, what I've seen over the last 3 years and the last year is that we've seen instantaneous strength in a market evaporate on one tweet, on one headline, whether it's real or imagined, right? And that's painful, right? A lot of people cannot sustain that kind of risk and that kind of uncertainty. So I guarantee you volatility and uncertainty. I can't guarantee you what the outcome will be.
Perfect. Well, thank you very much. And on that point, let me share the results of the poll. And we're going to head to the Q&A. So make sure, if you're listening, you have upvoted the question. Well, you can see there the interesting point being more than 50% of you are planning to do exactly what Peter said and sit this one out. It certainly makes for some anxiety-inducing moments if you keep checking your stocks throughout this period. But over to the Q&A. So the most upvoted question. I am going to ask you to answer this question live. So Max Hyde, I'm going to ask you to join the call. If you can't, don't worry, just let me know and I will ask the question for you. But let's give this a shot. So if you can unmute yourself, Max.
Hi, can you hear me?
Yeah.
Yes, I can,
Perfect.
Max.
So my question is do you think that the sustained economic growth and market growth before COVID that you were talking about was a result of Trump's administration or a result of Trump taking on Obama's strong economic performance?
It's a great question. I appreciate that. For everybody who didn't hear it, Max asked that the strength that I described on February 12th of a strong, robust economy with strong balance sheet by the banks and a consumer in good condition was a function of Mr. Trump's policies, or was it an overlap, or was it a continuation of all the work that Mr. Obama had done over his 8 years? And it is a good question. And you know what? My belief is, that economic policy and economic change doesn't happen overnight. So just because Mr. Trump became president on January 20th and the market rallied, is not really a function of anything Mr. Trump had done yet. Are there, let's examine for a moment too the fact that a fascinating number. How many Americans have exposure to the stock market. Okay, there's 6% of the American population are actively involved in their portfolio and the market. 14.8% of the American population have some exposure, whether they're in a union and have a pension fund or whatnot. That leaves a large part of the American economy that really have no exposure to the market. So my gut belief is that it was really a function of two things. One was economic policies that Mr. Obama worked on for a long time. And look at, we've seen an extraordinary rebound. We had a financial crisis in 07, 08. We saw huge stimulus packages and bailouts across the board. And bailouts and stimulus packages is sort of a self-fulfilled prophecy. If you take AIG and you bail them out to such an extent that the government owns their stock at 25 or 30, and you give them liquidity and flush economic robust balance sheet, and they in turn put it back into the market, you fulfill your prophecy that bailout that we had in 07, 08 created an incredible updraft by the economy and the market from 09 until 2017 when Mr. Trump took office. Is some of that rally attributable to Mr. Trump? It's definitely possible. You know, there are people who believe that, you know, he did change regulation laws. He did lower the corporate tax rate. And in turn, Republicans believe that that immediately equates to people investing in the market, those large corporations putting their money in the market, and people feeling a confidence in the market with lower regulations and to invest in the market at the same time. So I would say it's probably about 75-25, Mr. Obama to Mr. Trump.
There you go, Max. Thank you very much, Peter. JJ, you're up next, so I'm going to bring you in. If you can, unmute yourself.
Hi there. Hi, Peter. Just a quick question in terms of the difference between tech stocks and the rest, because we've seen the NASDAQ often splitting from the Dow over the last 7 months, and the NASDAQ's obviously trading a lot higher than its peak back in March, whereas the Dow's, I think, a bit down still. So do you think post-election tech is going to continue to rise, or do you think it's due for a significant correction?
Okay, so, you know, those are the high flyers. That definitely a big part of the rally that happened in March was, as I said, liquidity from the Fed, stimulus from the Fed, and NASDAQ, which is mostly tech sector stocks, which are incredibly pandemic friendly. And those that weren't were people who really thought on their feet, reevaluated their business model and jumped into the, and stepped up to help the economy grow and their companies grow within the pandemic sense. So there's a couple answers to the question. If you're a technical analysis person and you look at NASDAQ over the last year, you are seeing it butt its head against 12,000, meaning in a technical world, we call that a double top, right? For people who don't know the jargon, technical analysis is a way to trade the market. Some people trade the market off of headlines and fundamentals. Some people trade the market off of technical analysis, which is graphing that has been established through historic data to be able to give you the probability of a positive move in the market or a positive decision making. So double tops mean that the stock has made an attempt to break through a level, a ceiling, if you want to use that word, and has faltered a number of times. NASDAQ has had an outrageous run, right? And these stocks are high-flying stocks. They're incredible. We did see Apple split. Obviously, we're seeing people who aren't buying Apple at 400 who are getting involved at lower prices. Amazon and a number of the tech sector have really thrived in the pandemic. So there are two answers to the question. If the confidence of whoever wins the presidency is strong enough, then we are going to we're not going to butt our head up against the double top in NASDAQ. We're going to use that as a new base and blow through it. If, however, there's a little lack of confidence, and a lot of that, people feel that the sector is overextended, right? And that we're seeing other players come into the game, or basically that these stocks are trading way above price earning ratios that seem plausible. In the economy, as we try and recover, then you're going to see the NASDAQ pull back a little bit. But net over time, these stocks are monsters. They're gangsters. They are just, they've, and I mean that in a good way. They've really just done incredible things for the marketplace, for the consumer, right? And as we recover, I'm hopeful. I know we will recover. I'm hopeful it happens sooner than later, right? And I know that those people, those companies that are in NASDAQ are really the backwind, the strength and catalyst behind all of that. So there are really two answers to your question. We may butt up against it relative to confidence in who wins the presidency. We may blow through it and create what that 12,000 level as a new bottom, and we're going to build on that and go higher.
Awesome. Thank you so much, Peter. And thank you, JJ. I reckon we can fit a few more in. Bailey, it's neck and neck, but we're going to start with Bailey to bring in here. If you don't get a chance to have your question answered, we'll be chatting about this in the Finimize community, in the Finimize app afterwards. So we can go there. Bailey, if you could...
I'm always available. You can call me any day.
That's good to know. Bailey, if you could unmute yourself and put your question to Peter. If not, I'll ask it for you. Okay, cool. I'll ask it for you, Bailey. So Bailey would be interested to hear your opinion, and we've touched on this already a little bit, but on the stay-at-home stocks, the likes of Zoom and Peloton, essentially, are they overpriced?
You know what? It's really hard to, look, I'm not an economist, and that lingo to me seems like it perhaps was relevant years ago. I said to you, I'm in my mode is new rules 2020. So, I think we're off the charts on so many of the valuations, right? You look at Wayfair stocks, it was hard for me to understand, I beg people to do this too. This is a fascinating time. I want people to take advantage. Hopefully we'll never see the dark side of this experience again, but this opportunity when people are at home, really to start looking into what stocks benefited from this. And there are nooks and crannies where you'll be blown away to think, why would that stock go up in a pandemic? But they've done an incredible job of recreating their business model. Look, Peloton, fascinating company. It's amazing to look at some companies that were faltering before the pandemic, right? And then just happened to, lock right in. Who would have predicted that a very expensive bicycle at home, stay-at-home bicycle that costs $2,500, which is probably priced above your normal consumer's ability, when you could go to Planet Fitness for $12 a month and work out, if that's your story, who would have, and a stock that went public at a very difficult time, a company that faltered because of its price point, come into a pandemic where the health clubs were closed, and the only way you were going to work out and not, kill your families because you're in the same household with each other, and some exercise was to get that Peloton bike. So perhaps it is a little long tooth jargon that we use on Wall Street when a stock is a little bit overbought, but I don't know, it's really hard to know. Once again, two answers to the question. Are the gyms starting to open up again? Here in New York, they are. Are people going to go back to that initially? Probably not. Is Peloton going to be the go-to option, right, for people who want to exercise at home for the foreseeable future? I believe so. It's had an incredible run. It's been amazing. Are we going to see some pullbacks? As I described, we've seen Peloton hit a couple of double tops where it's really got, it was the flavor of the moment. Everybody was talking about it, right? And it skyrocketed. It went to 120, prices that you know, when it was trading at 25 and no one wanted to buy it, and it's trading at 125, you got to wonder. So there's two choices. If we're looking at another year of no more of people not going to the gym and people staying at home and the reopening being a difficult situation and the virus spiking, I think Peloton maintains itself. It may find a level a little lower than it is, but I believe it's still going to be the flavor of the moment for the time. What was the other stock he asked? Peloton and what else? Zoom. So to be perfectly honest, what an incredible opportunity, you know, that we can talk this way, that there are so many platforms, the ones that were in existence before the pandemic and those that have come to the surface. My gut is this is here to stay, right? I don't know what the world's going to look like on the other side of this pandemic. You know, we may have a vaccine. How many people are going to take it? We may have another spike as we're having. And is that going to be for 6 months? When is life going to be normal again? Where, you know, you're going to get on a plane and you're going to not work at home. My understanding from the research I do, and that's how I learn. I avail myself of everybody's opinion. You know what we say about opinions, right? Everybody has one, and I'll leave it at that. It's amazing. You know, that's what's so wonderful about the stock market. For everybody who's buying a stock because they think it's going up, there's people out there selling it. Some who may have bought it cheaper, or those who are shorting it. But at the end of the day, I believe I'm hearing that people at Google and a number of the other large corporations are still already, it's November, not almost there, are not going to be going back to work until late 2021, if not early 22. That means that this is here to stay. I believe no matter what, this is a solid base for the future. I think it's an extraordinary platform, whether it be Zoom or any of the other platforms. So I believe it's, you know, once again, two answers to the question. Do you buy Zoom, you know, for a stock that once 8 months ago traded at $20 and now trades at $200+? Do you buy it up here? That's a hard question. You know what I'm saying? I mean, that's the question that, you know, as a trader, it's a wonderful opportunity to trade Zoom, meaning that you buy on the dips and you sell on the rallies as a trader. That's something we can talk about another time. Do I believe it is here to stay? Absolutely. So would I just jump in and buy it today at $324 wherever Zoom is trading? I'm not clear about that, right? But that's what, you know, your audience needs to educate themselves. They can't just listen to some guy who says, buy it, it's great, you know, and it's gone from 20 to 300. You need to make educated decisions as an investor and as a trader. So I love the video space. I think it's here to stay. I kind of love the Peloton space, right? Because I don't think that we're going back to life as we know it for a while. Does that mean that I tell you now to buy it, which I can't do anyway? No, but it's definitely fascinating to watch because as sectors, you mentioned sectors are fascinating. There are stocks like Zoom that took off because that was the flavor of the moment. Everybody already was starting to use Zoom, but now that was the one. There are other platforms in the space, perhaps even in the home exercise space, that have not been as highlighted as Zoom, as Peloton, that may be potentially good investments, right? You don't always have to buy the high flyers, but if you get intrigued by the sector and you go home and do your homework, you may be able to find the nooks and crannies, other smaller companies, right, that are in that space, that are still trading at $30, that may be an interesting investment.
Yeah, 100%. The message there is very clear, folks. Do your research. And sadly, that brings us to an end. So for everyone that did have a question on the list, maybe next time. But like I said, get into the Finimize app. That's why we have a community. We're going to be carrying this conversation on through the evening. So I'd like to thank you, Peter. I really appreciate you taking the time to speak to us today. And I'd also like to thank IG for sponsoring tonight. Like I said earlier, if you do want to find opportunity on US election volatility, IG has more than 17,000 markets to trade and unrivaled out of hours service. So learn more on IG.com, but that's enough from us. And that's enough for you guys. So in person, we would normally clap. You guys can raise your hands. On
I got one thing first.
I
got to interrupt you for 1 second. Okay. So I'm the guy who makes the hats when we hit these thresholds of the Dow, and I'm known all over the world for it. Dow, 18,000, 19,000, 20,000. And anybody who knows me, you'll see that they always wonder, how'd you know it was going to go there? Because when it hit 18 and 25 and 30,000, I was there with a hat, right? I have to admit it was a very expensive year for me because we had weeks where we were going up 1,000 at a clip. But for me, branding and merchandising is one of the most fun parts of the market. So I want you, which is a present I'm going to send you, so this is our hope that the S&P will hit 3,500. There's the Finimize logo,
no way.
and there's the the IG logo. I'm going to send this hat to you so I just made this for you as a gift. IG, Finimize, Dow 30,000. So these are our hopes and dreams. People should stay involved with IG and Finimize and me, and maybe they will give them a hat.
That's awesome, Peter. Amazing. What a surprise. Okay, well, there you go. Thanks very much, Peter, and thanks to everyone on the call. That was a lot of fun.
Great time.
Bye, guys. See you later.
Bye, guys. See you again.